Good morning, everyone. David Paul speaking. It's about 9:30 on Tuesday, the 7th of April. London market is open now and has had a great start to the day. The title of this very short video, it's a video that I also done for Core Finance a few minutes ago. It's time to be brave. Don't avoid risk. Manage risk. Nobody knows what's going to happen next, folks. But there is a time to be brave, and it's probably today. That said, I have a lot of slides for you, but I'm going to go into VectorVest itself. This is VectorVest UK, and as we can see, last night we had a complete change around where our trend situation, the short-term trend, is turned to up. We got a green light in the price column of VectorVest, and although the color guard is only mildly bullish, VectorVest advocates caution when buying stocks at this time. Let's just have a look at the facts. So go back into PowerPoint and go to my chart. And that's the VectorVest composite after the close last evening, folks. I put on the DEW, which is a medium-term market timing system, and that DEW is still down. It didn't turn up yesterday. With any luck, it'll turn up today. So if your trading plan says that you take positions using the DEW, you would still be in waiting mode. Now we've got a green light and we've got a black star in that green light, so those people using that market timing system would in fact be doing something this morning. Very important that you sit down and think about which market timing system that you're using to enter positions. Is there risk? Of course there is, and I don't see a great deal of participation across the market because the buy-sell ratio has gone up from 0.02 to 0.03, so very little participation in this move, which is always a worry. Now the US market had a huge day yesterday, and as you can see, that same medium-term market timing system has in fact given a buy signal. I think if we do see this is what's called a 1, 2, 3 bottom, and the market yesterday was a higher high and a higher low, and certainly above today's high, and I think this market will run even if it's a bear market rally, folks. We can easily get up to here where this wave and this wave are the same in this particular rally, we can certainly have a very strong 2 to 3 weeks ahead of us. All looks quite good, and as I say, the futures and the US futures are well up today. It's a time to be brave. Now in the UK and in the US, I'm looking at the moment for shares that have a high RS. And to find those shares on VectorVest, rather than sorting by VST, we simply sort by RS, relative safety. And relative safety is a measure of risk. It looks at the balance sheet, the income statement, the cash flow statement, sales, margins of all of the companies on the LSE and on the American markets. It looks at dividends, dividend safety, dividend yield, and sucks in all those numbers and spits out a number on a scale between 0 and 2, which represents the safety and the predictability of the earnings. And at the minute, in this very dodgy period for earnings, where earnings are going to be trashed over the next couple of months, I'm looking for companies that have got the financial clout, the financial backing and reserves to handle that and prosper from that. One of those companies is Avon Rubber. Now I've adopted here the format of the earnings per share kings. In the UK we've had 3 gentlemen who've in fact championed this particular methodology, where they look at a trend over 5 years and they look at earnings per share over the last 5 years, and they're looking for solid trends with strong growth in earnings per share, and very importantly, very linear growth in earnings per share. And Avon Rubber fits the bill here. Earnings per share is nicely up over the period, and as you can see, the price has come back and clipped that last low and moving up very strongly indeed. So Avon Rubber looks like something to be brave in. Lion Trust has come off this long-term trend line. Earnings per share growing as well. There is an old top which has become support there. Those of you that are fib people, you can have a look at for a 78% retracement. Everything's coming together in Lion Trust. I like it. I have a small position in it from the first primary wave up, and I'm going to add to that position if I can get in. Games Workshop, exactly the same position. Look at the earnings per share growth here, folks. Pulled back to that last old top and a 78% retracement, all coming together. GB Group, my word, there's been noise in there over the last couple of days, but it's been a volatile period. Again, it's back at that long-term trend line. Look at the earnings per share over the last 5 years. So Diploma, pretty much the same thing. Again, exceptionally noisy. Halma hasn't quite come back to this trend line. It was down yesterday, so that's something that there could be a little bit more pain in until it gets to that support, because I can pretty much guarantee that the big orders will be sitting down around the lows here. So just watch that one. And JD, of course, has come back to that long-term support line. Had a very strong morning this morning. Some people have emailed me already to say that they're struggling to get into it. So JD looking like a bargain at the moment there. I know somebody emailed me the other day and said that they're not going to be selling many shoes over the next couple of months. That's for sure, but my word, their balance sheet is in good nick. And they do sell an awful lot online these days as well, but quite right, their stores are closed. And then of course the last one is a gold stock called Polymetal, and it pulled back to that support level. This would not be a high relative safety stock. It's a stock that I like the look of because of the potential run in the gold price. So I hope that helps, folks. Just remember, nobody knows what's going to happen next. It is my view that what we're seeing at the moment is a rally in a bear market. That rally can last a few weeks to a few months, and of course if the virus news gets better, and of course the central bankers keep pumping money in, we could see a V-based recovery. But until the market proves me wrong, then I think that this is a trader's market. It's a market that we need to be careful. It's a market that we need to, in fact, be involved in shares with exceptionally good balance sheets that can prosper in this very, very difficult period. And lastly, just like to wish the Prime Minister, Boris, all the very best at the moment. Get well, Boris. Bye-bye.